Have you ever wondered if you could release equity to buy a second property? Well, the answer is yes, you can. And in this video, I'll talk you through the ins and outs of equity release and how it can help you achieve your dream of owning a second property. Equity release can pay for various things like helping your kids, debt, and many others, which I'll explain in a minute. Let's quickly clarify what equity release actually means. Essentially, it's a way for homeowners to access the value tied up in the property and convert it into usable funds. Now, releasing equity to buy a second property may sound like an intriguing idea, but as with any financial decision, it's important to consider various factors that will impact your situation. Factors like your age, budget, and the type of equity release scheme you plan to use. For seniors, equity release schemes such as lifetime mortgages and home reversion plans can be viable options. These schemes allow you to access tax-free funds without the need for monthly repayments. The amount you release is paid to you as a lump sum, which you can then use to buy a second property, like a holiday home or an investment property. But what if you're not an older homeowner? Well, don't worry, there are options for you too. Younger homeowners can explore alternatives like remortgaging or second charge mortgages to access their home equity and buy another property. Remortgaging involves swapping your existing mortgage for a better rate and borrowing additional funds using your home equity as collateral. It's essential to consult with a financial advisor and consider options from companies authorised and regulated by the FCA, that's the Financial Conduct Authority, so you can make informed decisions. Equity release schemes are specifically designed for senior homeowners who own their homes outright. To qualify for these schemes, you usually need to be between 55 and 65 years old and have a property valued above 75 grand. Equity release schemes allow you to access a portion of your home equity without making monthly repayments. Instead, the debt's repaid in a unique way. If you move into long-term care, the property's sold to repay the debt. Otherwise, the debt's repaid from the sale of the property after your passing. But how does equity release work when buying a second home? Well, it's important to note that there are certain considerations and restrictions. Equity release can be used to purchase a second property, but it's typically advisable to use it for rental investments or holiday homes rather than a primary residence. Different lenders have specific criteria regarding what qualifies as a holiday home and the amount of time you can spend there. It's crucial to discuss this with your financial advisor to make the right decisions about your future. There are two main methods for releasing equity when buying a second property: lifetime mortgages and home reversion plans. Let's briefly explain each of these options. So a lifetime mortgage allows you to release up to 60% of the equity on your property without the need for monthly repayments. The interest on the loan is typically fixed and the total amount is repaid when the property is sold. However, it's important to note that the interest can accumulate over time, potentially increasing the overall debt. Some individuals choose to make voluntary interest repayments to prevent the debt from growing significantly. On the other hand, a home reversion plan doesn't involve paying interest on the released equity. Instead, you sell a portion of your property to a third party in exchange for a lump sum or regular payments. When the property is eventually sold, the third party receives their share of the proceeds, which is usually more than double the amount they initially provided. It's crucial to carefully consider the implications of each option and consult with a financial advisor to determine the best fit for your circumstances. There are benefits and pitfalls of equity release. One of the significant benefits is that the money you release is tax-free, allowing you to use it as you wish. Equity release can provide a financing solution for older homeowners who struggle to obtain traditional mortgages. Additionally, it's an investment that allows your beneficiaries to inherit a valuable asset even as the debt on your main home grows. Moreover, with equity release, you never have to make monthly repayments, giving you financial flexibility. However, it's crucial to be cautious and avoid releasing more equity than you actually need, because taking out excessive amounts can lead to a larger debt that could have been avoided. It's also important to consider the costs involved, especially if you're planning to use the equity release for the the rental investments, as a rental income might lead to increased tax obligations. Make sure to thoroughly research and discuss these aspects with your financial advisor to make informed decisions. Equity release can serve various purposes beyond buying a second property. So, for example, some individuals use it to help the family members by buying their own properties and by gifting them the release funds. This can be significant support for loved ones who struggle to save for a home deposit in today's challenging housing market. However, it's essential to consider the potential implications such as inheritance tax if the gift is given within 7 years of your passing. Equity release can also be used to fund education costs like private schooling for grandchildren or assisting children with university expenses. By giving your loved ones access to quality education, you can make a positive impact on their lives. However, it's important to weigh the financial implications and discuss the options with your financial advisor to make sure you have the best outcome for everybody involved. If you're considering gifting equity, there are potential benefits. If you're under the age of 55, giving equity to someone over 55 allows them to apply for equity release and access to release funds through a lifetime mortgage or home reversion plan. This can be an attractive option for lenders as the scheme's duration aligns better with the applicant's age. However, it's crucial to ensure that the recipient can prove sole or co-ownership of the property to successfully apply for equity release. Regarding inheritance tax, it's important to note that equity release alone can't help you avoid it. Inheritance tax is applicable to valuable estates passed to non-spouses or civil partners above a certain threshold. Additionally, any money gifted within 7 years prior to death is subject to inheritance tax. While equity release can be used strategically to mitigate inheritance tax, it's essential to discuss specific strategies with your financial advisor to assess the potential risks involved. Releasing equity can also be considered as a means to pay off outstanding debts or cover care home fees. For individuals with debts in later life, equity release can offer a solution by consolidating multiple debts into one without the need for immediate monthly repayments. However, it's important to carefully consider the implications and fees associated with debt consolidation and consult with a financial advisor to make the right decision for your financial situation. When it comes to care home fees, equity release can be used strategically. It can be used to fund private at-home care or help cover the cost of care while one person continues to live in the property. But it's crucial to understand that care home fees in the UK can be partly or wholly subsidised by local authorities. Your home equity will be taken into consideration during the means test, which may impact the amount that you're required to pay. Again, to make the best decision, it's advised to seek guidance from a financial advisor who can assess your circumstances. Equity release can be used to support education expenses like helping children or grandchildren, like I mentioned earlier, with school or uni. By providing access to funds, you can empower your loved ones to pursue quality education and potentially enhance their future opportunities. So is releasing equity to buy a second property a good idea? Well, it depends on various factors specific to your situation. Equity release offers opportunities for both seniors and younger homeowners to access their home equity and achieve their financial goals, whether it's buying a second property, helping family members, or funding education. Like I keep on saying, it's essential to approach equity release with caution, considering the potential drawbacks and consulting with a financial advisor so you can make informed decisions. Remember, equity release is a financial product that should be thoroughly researched and understood before committing. Always make sure that you're working with authorised and regulated companies to safeguard your interests. If you're interested in seeing if you could release equity, simply click the link below and fill out the short form. It contains a few questions like your property value and date of birth, and it'll give you access to quotes tailored to your circumstance. It's totally free to fill out, and of course, it's not going to affect your credit score. So click that link below, fill out the short form, and try it out.